and welcome. You're watching Your Trace. I'm Kavita Thapliyal, and with me is my colleague Ankur Mishra. Ankur, Ganpati Bappa Moria.
Yes, Ganpati Bappa Moria to all our viewers because festive season has started. And even if you talk about markets, which was one sector which is in green today, FMCG.
Exactly. The market definitely is waiting the impact of Bappa's blessing, and but so far today, as far the trade is concerned, we saw the tariff threats completely over the market. In fact, we closed 1% down as far as Nifty is concerned, more than 250 points down. Sensex almost 850 points down. 8786 is the number at which we closed, and Bank Nifty also 680 points down, 54,450. Now, having said that, the major indices were showing a lackluster performance, but more than that, the broader indices, mid cap and small caps, were really down 2%. Nifty mid cap 100 as well as the Nifty small cap 100. Having said that, Ankur, as you rightly mentioned, FMCG was the only a sector which also again reiterates the story that the consumption theme is really catching up, and these are the sectors and stocks that investors are also latching on. But having said that, metals, pharma, reality, all those sectors were down close to 1.5 to 2%. Major losers today on the trade were Shriram Finance, almost 4.5% down, Sun Pharma 3.5% down, Tata Steel, Bajaj Finance, Trent almost 2 to 2.5% down, and a slight buying that we could see in select counters. Definitely the FMCG and consumer sector counters were topping up the charts. HUL, Maruti Suzuki up almost 2.5%. Nestle again we saw almost up 1%. Aisha almost 2.5%. So overall, stock specific and majorly dominated by consumer sector, which ended up in green. But overall, the market breadth was very weak. Also, 295 declines and 2215 advances. So this shows the nervousness that the market has once the extra tariff comes into action, comes into play. But then, having said that, we do have our experts who can help you out with all of this and your trade strategies in the next trading sessions. Let's welcome Ajit Mishra, SVP Research, LK Broking. Ajit, hi, afternoon, and welcome to the show. All right, not an impressive session today, and as expected, the nervousness was looming all over the market and market's trajectory. Now, what's next?
Yeah, good evening, Kavita. Good evening, Ankur. So yes, it's not a very decisive or great session to be in, especially after 2 weeks of rebound. We were hoping that at least index should respect the 24,800 mark, the 20 EMA. But today, at the opening tick itself, we decisively breached that area. And the major culprit is the banking space. So banking, Kavita, we were not seeing any kind of participation altogether in this entire rebound. And with decline in the private banking heavyweights today, it further, dampened the sentiments. So from here on, the way we've ended, the gap that we had post, PM speech on GST reforms, Nifty is going to fill that gap. So close to around 24,600, 630 area is something that, we might see further pressure. So somewhere around the 100 EMA, again, we might see index taking a breather. But as of now, the tone, like the recovery tone, that has derailed now. And we shall be seeing more of consolidation with the negative bias in days to come.
So consolidation is expected. Ajit, hi. I want to understand from you few of the stocks which were doing very well today. Let's start with FMCG ones first. HUL, Nestle, they did well. And also I want to get your view on auto stocks. Of course, there was a divide. On one hand, M&M was down today. But if you talk about Maruti, that has been a star performer. I want to get your views on these themes and stocks.
So exactly. So it's not that everything was down and out. We were seeing that in today's trade, Maruti continuing its prevailing momentum. In fact, the stock was up roughly around 2% with noticeable surge in the volume. We are trading at the record highs, and it seems like the shorts are trapped here. So which is further pushing these stocks higher. So auto FMCG, I believe, will continue to do well, even if let's say we slip further lower. Because the way during this recovery, we saw that FMCG and auto were among the top performers. So this kind of outperformance might continue. There could be a bit of a consolidation every now and then. But this overall positive momentum is here to stay. Especially stock like iShares, M&M, though we are seeing some profit taking, but it is okay. TVS and Maruti should be preferred from the auto space. And from the FMCG basket, Marico, Godrej Consumers, Britannia, and HUL. These are the top 4 names which one can consider.
Ajit, any strategies from this space or anything else, any other sector and stock that you think is good enough as a positional call maybe for short term?
Yeah, so Kavita, in a market like this, one should maintain position on both sides. So at one end, we are seeing resilience in FMCG basket, wherein Godrej Consumer, after retesting its previous swing lows, has rebounded very swiftly in the last trading session where the markets were witnessing a bit of profit taking. It's strongly holding the ground. So we anticipate this consolidation to end with a positive note. So one can utilize this pause to accumulate the stock, and 1320 is what we are eyeing in the near future. So with stop at 1228, one can go long in Godrej Consumers at current level. At the same time, since the banking index has slipped below its critical support, and we might see further pressure or follow-up decline, in the days to come, IndusInd Bank, which is underperforming within the sector, is something that one can look for shorting opportunity. So 720 is what we are eyeing in the near term as a target, with the 788 as a stop loss for IndusInd Bank.
Right, Ajit, thank you so much for joining at this hour with your views. With this, it's also time to hear some more words of wisdom. Amish Shah from Bank of America was talking about the capex. Let's listen in.
We think that structurally capex growth in India is now going to expand only from 9 to 11%, and 11 will therefore fall short of the 17% expectation, and which is why bulk of the capex stocks we are negative, including cement. That said, coming back to my point earlier, that there are some pockets where we think that there is growth visibility, and while the valuations are expensive in those spaces as well, defense, shipbuilding and power transformers are 3 sectors where valuations are rich, but the growth visibility is quite high, and therefore relatively within the capex space, we will continue to be overweight on defense, shipbuilding and power transformers. We are bearish on the rest of the capex space.
All right, so as the US 50% tariff on India come live from Wednesday at 9:31 a.m., we decode how the new levies will affect India's trade ecosystem and domestic market. Snehi is here to do that. Snehi.
Well, yes. So first up, let's understand what the impact of these additional 25% tariff could be on some of the sectors that stand to be the most impacted. So sectorally, let's talk about them one by one. First up, electronics. 14.3% of India's total export to the US is made up by electronics alone. So that translates to roughly $11 billion of trade that that India carries out with US by exporting electronics. So some stocks from this sector like Dixon Tech, PG Electroplast, Amber Enterprises could be in focus and could stand to be impacted. Next up, gems and jewelry also in focus. 12.8% of India's total export pie is made up by gems and jewelry alone. That's roughly $10 billion of trade annually with the US. So you actually have names like Web of Global, Rajesh Exports that stand to be hit the most. Moving away from that, pharma as of now and refined petroleum products, both of them are exempted from tax from these tariffs right now. So we'll talk about them when we have some more clarity on both of these sectors. But nuclear reactors, machine parts and machinery overall. So these are also some spaces to watch out for, and that also makes up roughly 8% of India's total export pie and $6.2 billion of trade carried out annually with the US. So watch out for this space as well. Moving on from that then, refined petroleum products, like we mentioned earlier, they're exempt from tariffs as of now, but iron and steel products, they make up almost 3.5% of India's total export pie to the US, to the tune of $3 billion of trade carried out when it comes to iron and steel products. So watch out for some of these metal counters, especially the ones that are specializing in iron and steel. Tata Steel, Jindal Steel, JSW Steel, all of these counters could be in focus. Next up, textile articles. A big impact is what we had seen when the first and the second round of tariffs are announced. So textile and organic chemicals were some of the sectors that What impacted the most? 3.5% of total export pie coming in from textile articles to the tune of $2.8 billion. So Gokuldas exports, Vardhaman fashions, you have lots of textile stocks that could also be in focus, like Wellspun Enterprises and Trident too. And lastly, let's also talk about some other sectors that could be in focus. That's auto and auto components, non-knitted apparels, as well as organic chemicals. Anywhere between 3 and 3.5% of the export pie each they make up to our export to the US. Anywhere between $2 and $2.5 billion of trade each. So lots of stocks coming in from the chemical space, from textiles, from auto anchors like Sona BLW, Motherson Sumi, Samil. All of these could stand to get affected as well. So watch out for all of these stocks, and all of these sectors could be the first in the line of impact when it comes to this additional 25% tariff imposition.
All right, Snehi, thank you so much with those details. But shifting focus to pharma sector, US President Donald Trump reiterated his plans to slash drug prices in US. He pushed for a decrease for about 1,500%. On the back of this, pharma stocks were all trading under pressure. My colleague Sharad is here with all the key highlights.
Well, interesting statement coming from Donald Trump. That Trump has stated that they will be decreasing the drug prices by 1,400 to 1,500%. Technically, it's mathematically not possible. But anyways, the price erosion is there and it's likely to be seen for the certain therapies if the prices actually fall down in the US markets. And of course, that will put a lot of pressure on the yields for the exporting giants. Now, there is uncertainty regarding the imposition of tariffs. And do remember, tariffs are still exempted under the Section 232. Today, there was a big downgrade also coming in from foreign broking house BofA on Sun Pharma, where the target price from 1730 has fallen down to 1570. And interestingly, the downgrade is coming to underperform from the neutral segment. Now, let's look at how the Nifty Pharma Index has actually panned out, and I've taken it on a quarter basis. We see the fourth quarter last year, it was down 2%. The first quarter took a massive beating, around 8% downtick, but still you see 3% downtick coming for Nifty Pharma Index. So this is the last 4 straight quarters Nifty Pharma Index has been falling. Now let's look at the Indian pharma companies' exposure to US. Zydus Life, that's on the higher side of 47%, followed by Oro Pharma, Dr. Reddy's, Lupin, and also the smaller names such as Glenmark, Ajanta and Torrent Pharma, which are the mid-cap names. They are also ranging between 27 to 32%. Now, what would be the expected revenues going ahead for the next 2 years? That is also something to watch out for, where Sun Pharma is expected to kick in at roughly $2 to $2.3 billion. Dr. Reddy's, Cipla taking the lion's share of overall revenue estimation, while Gland Pharma, Alchem Labs and Torrent Pharma also make it to the list, but with a lower exposure when it comes to their revenues.
All right, so that was all about the pharma sector. But then let's cut across our colleague Rabinder, who has more stocks in news. Rabinder.
Well, as Ola Electric is in focus in today's trading session, where company has announced that they have received a certification for compliance with eligibility assessment required under the PLI scheme for the automobile and auto component sector for its Gen 3 scooter portfolio. And with this milestone, Ola Electric Gen 2 and Gen 3 scooter portfolio now stand PLI certified. And as a result, the certification is set to significantly enhance Ola Electric profitability from Q2 FY26 onward. Apart from this, BLS International is also in the focus in today's trading session, where company has received a work order from UIDAI for the providing services as a service provider for establishing and running district level Aadhar Seva Kendra, and the cost of the order is 2,055 crore. Apart from this, pharma stock Gland Pharma is also in the focus in today's trading session, where company has received US FDA approval for Vasopressin in 5% dextrose R2U injection, and according to IQVIA, the product has US sales of approximately USD 45 million for the 12 months ending June 2025. And lastly, Sun Pharma is also in the focus on back of brokerage downgrade, where BofA has come out with a note and they have downgraded the stock to underperform from neutral rating, and they have cut target price to rupees 1570 as compared to earlier target price rupees 1730, and they say that they see risk to consensus earnings and premium valuation. So back of this, Sun Pharma were also in the focus.
Thank you so much, Rabinder, for putting it into perspective. But what are the cues which are to be watched out for Thursday? My colleague Snehi is standing by with just those details. Snehi, over to you.
Yes, lots of cues to watch out for, and since the 27th is a trading holiday, here's a list of all the cues to watch out for on the 27th as well as the 28th. So you are equipped with everything you need to watch out for when we come back on trade. on Thursday. For India, the 27th, Trump's 50% tariff deadline is going to, of course, come into play. The MSCI rejig will be coming into effect because it's the 27th is a trading holiday. We'll see the impact coming in on the 28th for the same, and similar will be the impact for the Trump's secondary tariffs as well. The market impact and the market reaction for both of them will be seen on the 28th, which is also the monthly Nifty expiry. So expect lots of volatility and lots of market action when we return back to trade on Thursday after the trading holiday. Other than that, you also have industrial production numbers coming in on the 28th as well. Globally, from the US on 28th August, you have their quarter 2 GDP numbers along with initial jobless claims. From Eurozone on the 28th of August, you have consumer confidence, and ECB will also be publishing an account of the July rate decision meeting. And from China, 27th August, you'll have industrial profits numbers as well. In terms of global earnings, all eyes are going to be on chipmaker Nvidia as well as CrowdStrike on the 27th of August. But shifting focus back home in terms of corporate action and board meetings, 27th August, watch out for Acme Solar. The board is going to be mulling fundraising, and on the 28th, a whole host of stocks will be in focus on the back of their last day to buy them to meet that record date for the dividend eligibility criteria. Names like BKG Foods, Engineers India, IRB Infra, NBCZ, Protean, eGov, Vijaya Diagnostics, Whirlpool, Z Entertainment. Thursday is going to be the last day to buy all of these stocks. As Friday, they will be starting to trade ex-dividend. In terms of AGMs, on the 27th, you have Senco Gold, REC as well as BEL. On the 28th, you have a whole host of companies like Samvardhana, Relaxo, Maruti Suzuki, Coal India, Jubilant Foodworks, Geo Financial, RVNL, NTPC Green, and a whole of other stocks. So watch out for all of them as well. And lastly, in terms of other events that we are going to be tracking over these 2 days, lots of important commentary coming in from the Fed. You have Richmond Fed President Tom Barkin, who's all set to speak. And you also have Fed Governor Christopher Waller, who's going to be speaking on the 28th of August. So watch out for all of these cues.
Thanks, Nehi. So a lot of cues to watch out for Thursday. But with this, it's time for a wrap in this edition of Your Trades. Thanks for tuning in.